One of the big drags in the market today, Aetna. The insurer reported some disappointing earnings news, and investors are punishing that stock. Bloomberg's Laura Lee is joining us now, and she has all of the details. Laura, good afternoon.
Yeah, good afternoon, Mark. You know, if you're an investor, this isn't the kind of news you want to hear. Aetna, the country's third largest health insurer, said profit fell 28% in the second quarter, missing analyst estimates. On top of that, the company also cut its full-year profit forecast for the second time in 2 months. So what's going on here? Well, Aetna says rising medical costs are cutting into profits, and those higher costs have not been fully reflected in pricing. Now, the bright spot, there is one, even with higher unemployment, enrollment in Aetna's medical plans shot up about 9% in the quarter. Still, investors aren't taking the news well, with Aetna shares down more than 4%, one of the worst performers in the S&P 500 today. And analysts say what's most troubling here is the fact that Aetna really doesn't seem to have a good handle on the outlook for profits, and that, of course, is a big concern. Mark?
And Laura, what about healthcare reform? What kind of impact could that have on Aetna's earnings?
Well, you know, that's the other big worry out there. There's a lot of uncertainty about healthcare reform and the kind of negative impact it could have on earnings for the insurers. And we've seen those concerns weigh down managed care stocks, down about 0.5% today. Now, analyst Matt Perry over at Wachovia remains cautious on Aetna and recommends investors may want to consider moving into competitors like Humana, Coventry Healthcare, as well as WellPoint, saying those companies have less exposure to healthcare reform and have already gone through the margin squeeze that Aetna is experiencing right now. Back over to you.
Bloomberg's Laura Lee joining us. Laura, thanks.